They say, money makes the world go round. But long before coins clinked or banks tallied balances, the world moved in silence, in the quiet exchange of goods and favors. Imagine a marketplace, centuries ago, where a farmer trades his sack of grain for a basket of dates, a loaf of bread for a piece of cloth. There is no currency, no ledger, only trust, haggling, and the unspoken rhythm of survival. This was the world of barter, simple, yet fragile. Barter was the first language of trade, yet it carried hidden risks. What happens when the wheat farmer has no use for the basket of dates, or the cloth merchant cannot offer the bread the farmer desires? These limitations spurred the human imagination, nudging societies toward a system that could measure value, store wealth, and bridge the gap between wants and needs. Our story begins in the bustling streets of ancient Mesopotamia. Around 3000 BCE, in the cradle of civilization, city-states like Ur and Babylon were thriving hubs of trade. Traders carried silver ingots, barley, and clay tablets, recording debts. Here, the concept of money began not as coins, but as a promise that the grain lent today could be repaid tomorrow with goods of equivalent worth. This was more than convenience. It was the dawn of financial trust. But humans are creatures of complexity. Trade grew, empires expanded, and the simple barter system strained under the weight of ambition. Merchants craved a medium that was universally accepted, divisible, and durable. Metals, gold, silver, copper became tokens of trust, recognizable and valuable to all. With metals came minting, marking, and eventually, coins that carried the seal of authority. For the first time, value could be quantified, standardized, and stored. Civilization was stepping into a new era, one measured not only in goods, but in wealth itself. Yet even coins had limitations. Carrying heavy ingots across deserts, rivers, and mountains was dangerous and cumbersome. Pirates and thieves waited on every trade route. Entered the idea that would forever transform commerce: the bank. It began humbly, in the crowded marketplaces of medieval Italy. Merchants, wealthy beyond measure, needed a place to store their precious metals. In Florence and Venice, bankers began keeping deposits safe, issuing letters of credit that could be redeemed far away. Imagine the tension of a trader in the 14th century, clutching a fragile parchment, knowing it could replace the weight of gold on a distant shore. This innovation was subtle, but revolutionary. Trust had moved from grain to coins to paper, and the world was changing silently around it. The first true banks, however, were not merely safekeepers. They became engines of ambition. By lending out deposits to other merchants and rulers, they injected capital into the veins of commerce. Florence's Medici family, perhaps history's most famous bankers, wielded influence that rivaled kings. They financed wars, patronized the arts, and built cathedrals, all fueled by the delicate trust of depositors and the promise of repayment. Here, finance met power, and the first lesson was clear. Banks do not just safeguard wealth, they create it. As Europe emerged from the shadows of the Middle Ages, trade routes extended to every corner of the known world. Venice, Genoa, and later Amsterdam became global nodes of commerce. The Dutch East India Company issued shares, early stock offerings that could be traded and owned by hundreds, even thousands, of investors. Money was no longer static. It moved, multiplied, and reshaped society. And yet, every innovation brought risk. Bank runs, defaults, and fraud haunted these early institutions. Human psychology, the fear, the greed, the trust-wise, as crucial as any coin or ledger. Now, picture the streets of London in the 17th century. Coffeehouses buzzed with speculation and rumor. Merchants, nobles, and adventurers discussed risk as passionately as philosophy. In 1694, amidst political turmoil and the lingering threat of war, the Bank of England was born. Its mission was simple yet profound: to lend to the crown, manage national debt, and stabilize the currency. But its creation was more than administrative. It was a psychological pivot. People were being asked to trust an institution with unprecedented power over money, over life itself. The consequences were seismic. Suddenly, Governments could finance wars without draining treasuries. Merchants could borrow for expansion, fueling trade that spanned continents. Ordinary citizens, too, became part of the financial ecosystem, depositing savings and accepting notes backed not by gold in their hands, but by trust in the bank's promise. The world had shifted from tangible barter to abstract, systemic wealth. But this evolution was not without tension. Each leap in finance carried mystery and drama. Paper money could be forged, banks could collapse, empires could crumble under the weight of debt. The psychological dance of trust and fear became inseparable from economics itself. One misstep, a rumor of insolvency, a failed harvest, a war could ripple across nations, toppling fortunes overnight. And history is replete with such moments where the invisible currents of finance shaped empires more than armies ever could. As we move into the 19th and 20th centuries, the story accelerates. Industrialization demanded capital at unprecedented scales. Banks evolved into central hubs, regulating money, issuing credit, and influencing entire economies. Trade became global, no longer bound by local markets. The foundations laid by bartering farmers and medieval merchants had expanded into an intricate web connecting continents, cultures, and human ambition. And yet, despite centuries of evolution, one truth remains. Trade, whether through barter, coins, or banks, is a mirror of human society. It reveals our fears, desires, and ingenuity. The first bank changed the world, not merely because it held gold, but because it altered how humans interacted with wealth, risk, and trust. It transformed scarcity into opportunity, potential into power, and ideas into reality. Today, as we swipe cards, scan phones, and transfer funds across digital continents, we are participating in a story that began thousands of years ago with a simple trade of grain for bread. Every financial decision we make, every investment, every loan, is part of a chain that links us to farmers in Mesopotamia, merchants in Florence, and bankers in London. The tools have changed, the scale has expanded, but the essence, trust, value, and human ingenuity remains eternal. In the end, the evolution from barter to banking is more than a tale of money. It is a story of civilization itself, of how humans learn to measure and manage value, to collaborate across distances, and to imagine possibilities beyond immediate needs. From the grain-filled baskets of ancient marketplaces to the digital ledgers of today, the story of trade is the story of us, our fears, our ambitions, and our relentless drive to shape the world. So the next time you see a coin, a note, or a digital balance, pause. Consider the centuries of human innovation, the risk and trust, the drama and tension that brought that simple symbol into your hand. And remember, the first bank was not just a building or an institution, it was a turning point. A moment when human society dared to dream bigger than barter, bigger than scarcity, and bigger than itself. Thanks for watching, and don't forget to subscribe for more stories that shape our world.